Earnings continue. George Tsilis joins us, our senior markets correspondent, looking at Illumina GT, a very successful trade over the last 6 months. Up on the year, but given the decline in the first half, this has been somewhat of a comeback story. This is a company that makes some pretty advanced, incredible stuff, genetic and genome analysis that a lot of folks got hyped up on around COVID. George, 153, we closed at. Right now, trading around 144. We're getting a hit, even though EPS seemed to come in a little bit ahead of expectations. What stands out to you?
Well, I mean, this is obviously the company's really unique and important. It's a genomic sequencing and DNA testing company, and the company is profitable. So we've seen a lot of these, smaller competitors out there that have just been decimated since the peak in February of 2021. Effectively in this whole growth group. But, Illumina has had, large market share from the beginning, about 70% of the DNA sequencing and genomic testing, but they also have DNA oncology business as well, both in clinical and research. So, when it comes down to the underlying business, there has been a lot of drama around an acquisition the company made of Grail, which was a UK competitor back in 2022, and the company actually went through with the merger prior to getting the EU Commission's approval. So they were sued. Effectively, the merger was blocked, and they were penalized with about a 480 million rounded up penalty. But the company did win back the penalty, and it looks like the merger is going to follow through. So it's been a little bit of a confusing and volatile ride for shareholders, but nonetheless, over the past 6 months or so, it's been moving. Now, looking at the report, obviously it came in ahead of the estimates for EPS at $1.14 versus the 88-cent estimate. So that was a significant increase compared to the 33 cents they earned last year. I suggest a portion of that is probably the monies that they were supposed to pay out to the EU and that penalty, which are now legally not abided by law to pay it. So. But sales, again, came in slightly higher, $1.08 billion, looks like, versus $1.079 billion. But that was a slight decrease compared to $1.12 billion for the same quarter last year. What I have here for revenue estimates was a decline of about 20 basis points or 0.2%, at least going forward for the next quarter. Now it looks like they're guiding slightly lower than that, about 3% lower on revenue. But at the same time, what I have here is $3.91 of EPS, and it looks like the company just reported EPS of 405 to 415, so midpoint at 410. So it looks like they're guiding higher on EPS, but a little bit slight lower, if you will, on top line sales.
Okay. I mean, it's just slowing down. It seems like they're sort of treading water with their sales. Small single-digit contractions, not terrible. So if they want to win over the market, they're going to have to do it on the bottom line through margins, profits. So it seems like there's some hope for that here with the earnings beat, but sales pretty soft. So I think that's a good characterization, George. Thank you very much. Thanks, GT. All right, Illumina down a little bit here in the aftermarket. Thanks for the look at the earnings there, George.